Alright, this is going to be the first episode in algorithmic theory. Forex is not random. Today we're going to talk about how do we use narrative, how we know when we're in a buy program, how we understand changes in the state of delivery, and seasonal tendencies. So the first thing I'm going to put on the screen is the seasonal tendency. So here we have from April to the midpoint of the year to June, clearly a bullish uptrend. Right? Now, nobody knew at this point, right, that we were going to buy from this level here, but there is a tendency to know that from this time of the year we tend to go bullish. Look back in the history and you'll see it happen every year. So here's the range that was given. We're going to use hindsight in this lesson. This is the range. Now the buy program started here. The buy program started here, and there's two major swing points once this buy program started here. Okay, I'm going to put them on the screen. What I want you to notice about these swing points is that they're all occurring within the range of the buy program. You have a range from here to here. 50% of that range is 25% of the overall range it moved. Then you have another range from here to here, which is roughly from 50% to 100. 50% of that is 75%. And what I want you guys to understand is that when we get to these points in the range, look what happens. We see pullbacks into these areas. We see pullbacks into these areas. So the first thing I'm going to put in there are the first change in delivery. Because we were selling up to this point. Where was the first change of delivery where price actually broke structure? Right here. This was the first change in delivery. And what's really important about this is how we ran this internal liquidity. This is low here. Created a run on full stops, right? External liquidity ran. And then from this low, when it pulls back to mitigate any sellers from this point here, right? On the low end here, this is where the buy program starts. So the buy program starts here, and it breaks structure here, market structure shift. So in terms of state of delivery, this was the first change in the state of delivery. That gave us a buy program from this low to this high, and that's why we have a swing point. Well, you might be asking, wouldn't we buy here? It's not that you can't buy here, but the focus of this video is going to be how we can target from this low all the way up to this high. So let's talk about that. Let's talk about the arrays that we were targeting. So we have this order block, right? These last three up candles that create the order block. You see the displacement here? Displacement between this wick low and this wick high. We have the displacement, right? Leaving fair value, and we have these last three up candles. Now when price comes up here, you see how this wick closed like that? This can, and most likely will in many cases, become a rejection block. So what I want to put on the screen here is basically the range of this bearish order block. And as you can see, the open, right, or the low of this order block creates another rejection point at the discount level in the order block, right? So when we get our first change in state of delivery, what does it create? It creates equal highs, right? This high right here is low resistance because you can see that when we ran down here and created a high resistance liquidity run, this creates a breaker block once it's ran onto the upside. So when price comes and makes these equal highs and hits the premium array, we are now in a premium of this overall range. So just to keep it simple, we get an immediate change in the state of delivery right there. Once we hit that level, right here, change in state of delivery. So let's focus on that. This area, when it comes back, this is where the magic happens for us, guys. This is it. This is what it's all about to trade these smart money concepts to understand, like, how do I get into this move? Right here, the moment that we have a change in state of delivery, we have to understand that we are already bullish. This is a daily time frame. We're already bullish. Okay? So I'm going to go ahead and put the macro breaker here. All right? Now take a look at that. The change in state of delivery immediately hits the breaker, and we have a reaction for the next couple. Let's go to the 4-hour time frame. Okay. So as you can see, on the 4-hour time frame, you can see that we made it from here. Now, at what point does the state of delivery change again? When I'm talking about the change in the state of delivery, we're talking about the narrative here. Where does it change? From this low to this high, is that a change in state of delivery?
No.
No, it's not. It's all internal of the swing point, and it's still in discount. Now, when price comes down here, this specific level here, and runs this short-term low, this creates an intermediate low. And then you have a higher low here, which is another short-term low, right? And it displaces. This is the change in state of delivery. This is really important. Okay, so we have a change in the state of delivery. And what happens then? Price fails to get to our liquidity point, and it consolidates. Remember, it's a 4-hour time frame. We're talking 2.5 days of consolidation, and what does it do? It runs. Meaning, if your target objective was this high here, and you're seeing it failing, you're seeing it fail at the same level that it's been failing at, just know that this is all a reaccumulation. The fact that we're in a buy program and it comes back down, they're coming back to rebalance an imbalance. Right? What's left in this breaker that's not touched? This order block right here. It's the only thing that's left. Comes down aggressively, changes the state of delivery. Again, right here on this movement here. Now, the reason why I'm going one change in state of delivery to the next is to show you how we target these objectives. This is a 4-hour time frame. This is the lowest macro time frame you can use to get points of interest for the day trade, right? So if you're trading on this day and you know that you're bullish, this is a day that you sit out. You've already made an attempt to break this high. You have to sit out and wait for a rebalance of the imbalance, and then you can get in. Now, do I tell you to get in right when it hits here? You can, but that's not the purpose of the video. We're waiting for the change in state of delivery. The moment that we come up, whipsaw back, rebalance this imbalance, pull up, and fail to run this low, this becomes a long-term low here. Then we have a short-term low it ran, creates another short-term low. This is a long-term low. Okay? The state of delivery is not changed yet until what? Till this high is taken. So once that high is taken, right here, we can anticipate this high being taken the moment that we come up here and do the same thing that we did over here. They create relative equal highs here. Relative equal highs. Use all the concepts that you know about smart money. Pull up the DXY. Pull up EU. Find SMT. All the smart money tools available to you, you use them. But the point is, just looking at this, we're already bullish. We're already anticipating higher prices. We already have these equal highs here. We already have a market structure. We already have a failure to run low here. We already have a higher low here. So now, this pullback here is in fact a buy, and it is where the change in state of delivery happens. Right here. You see that? And there's no hesitation in running these highs. And this move right here, from this low to this high here, this is up to 50% of that daily bearish order block. we can assume that it's going to likely reject in this area. It's not a surprise, in other words, when the narrative switches and comes down and changes state of delivery. But when they do this, check this out. This is the coolest part. When they do this, the level that they come to is this BISI. This is the same signature that you see here forming on the left side. On the sell side of the curve, you see these last 3 up candles, right? That then displays to the downside. Well, now you have the same exact thing here, right? You have 3 up candles, but we're on the buy side of the curve. So are we anticipating it to come down? No. We already have a run on a previous day high. We expect price, once it hits the 50% of this rejection block, to retrace into a discount array of the current range. We broke this range. We are above 50% now on our overall range. Remember, it's from this high to this low, right? And the buy program started here. So we're at 50% from this low already up here to this high. We don't expect it to come back down here. So when we go back to the 4-hour time frame, man, it makes sense that there's trades offered in this discount array. It makes sense. And then it goes on as follows, right? We get a buy. Changing state of delivery to the buy side, run this high. Now at this point, we're above 75%. We are inside of the bearish order block. The trade is 75% done. You don't have to keep holding this objective as a short-term trader. This is short-term bias is what we're talking about. From this low, targeting this high is a short-term bias. So when we get to this area here, I'm not going to keep showing you the changes in state of delivery. I think you get it. So what happens is we dance around in this premium until ultimately they decide to run and find support at the premium level of the BISI. Now, this right here, this back and forth, this consolidation market profile in a premium at a rejection block is not something I would want to be taking day trades off of. That's why the short-term trade is from this low to run up at least to 75%. And if you got in from down here or over here, then you can say, all right, my objective was to get to at least 50%. This is how you have liquidity objective targets. Like, you need to know where you're getting in and out. Now, if you guys have any questions, feel free to put them in the chat. I'm going to end the video right here. I hope you guys gain some perspective from this, and I'll see you in the next video. Let's go!